when safe stops being safe. On paper, many affluent portfolios still look disciplined. Bonds, dividend stocks, cash, and municipals. The familiar ingredients of stability. But markets like this expose the difference between what looks safe and what holds up. Because the real question is no longer whether a portfolio appears conservative. It is whether it still protects purchasing power, preserves after-tax income, and provides real diversification when pressure shows up. That is where many affluent families begin to feel the gap between appearance and durability. Welcome back to Investing Outside the Box. I'm David Harris with Alternative Investment Advisors. I work with affluent families facing decisions that expose weak portfolio design. Liquidity events, concentrated positions, retirement income pressure, and rising tax drag. Recent data is reinforcing what many investors already feel. Safety has become more complicated. Inflation has not disappeared, and growth no longer gives much room for error. When those two forces collide, traditional forms of safety can become more costly than investors expect. That is why more affluent investors are questioning whether conventional diversification still provides the protection they assume it will. For affluent investors, the greater risk is not a dramatic loss. It is quiet erosion. It shows up when income looks adequate before taxes, but thinner every year after taxes and inflation. It shows up when assets meant to offset one another start moving together. It shows up when cash feels stable, but inflation and taxes quietly erode purchasing power. Traditional fixed income still has a role, but when inflation stays sticky and rates remain elevated, that stability feels less protective than it once did. And broad public market diversification often looks more convincing on a pie chart than it feels in real life when multiple pressures arrive at once. A portfolio can look conservative and still fail where it matters most. Less spendable income, less flexibility, and more tax drag than expected. You are not being reckless. You are following a model that worked for decades. The problem is that yesterday's prudence can become today's blind spot. This becomes far more consequential when retirement is close, or when portfolio income already supports your lifestyle. At that stage, the goal is not simply to perform well on paper. It is to preserve flexibility, avoid forced selling, and reduce the drag that taxes and inflation impose year after year. That demands a more deliberate form of portfolio design, built around function, not habit. For affluent retirees and pre-retirees, the real question is not, how do I maximize returns at any cost? It is, how do I protect lifestyle, preserve optionality, and improve after-tax outcomes? What affluent households need now is not more commentary. It is a better framework, not panic, not prediction, and certainly not product chasing. A better framework asks, how much of this portfolio is truly built for income? How much is built for inflation resilience? How much is built for liquidity and flexibility? How much is exposed to taxes unnecessarily? And how much still relies on public markets to solve problems they may no longer solve efficiently? For some families, the traditional structure still fits. For others, it may make sense to add carefully selected alternatives designed for contractual income, lower correlation, or real asset exposure. Allocation should follow purpose, not habit. Here is the question that matters. Is your portfolio merely diversified on paper, or designed to remain durable if inflation stays sticky and rates stay higher for longer? If that question feels relevant, and you have meaningful taxable wealth, this may be the right time to pressure test what's safe really means in your portfolio. At altsadvisors.com, you can request a private portfolio pressure test to examine rate sensitivity, tax drag, liquidity, and whether your allocation fits the market we actually have, not the one investors grew used to. No product pitch, no generic allocation talk, just a clear fiduciary process to reveal where your portfolio may be more exposed than it appears. Because real safety is not about what looks conservative. It is about what remains durable, spendable, and tax-aware when conditions change. I'm David Harris, and this is Investing Outside the Box.